So got that going. Let me minimize this. Perfect. All right, let's get it. So check it out. Before we dive into it, just as a quick review, I like to do this on every single call before we get into it. Again, guys, you should know here we play smart money. So we want to be able to look at, pretty much the opposite side of things when it comes to trading. What most people are taught are patterns. What most people are taught are to, trend trade and this, that, and the other. But, what we do is we know that these equal highs. We know that these equal lows. When we see these, I don't want them to be opportunities. I don't want these patterns to be opportunities. I want them to be targets. Okay, so again, what do we look for in the market? We look for the market to make equal highs, right? Fall back down. This is taught to be a double top, right? So most retail traders are going to sell off this double top and be able to make a profit to the downside. Now, you can make profit to the downside, but what we teach here is institutional. So what I see this as is a big player's money pool, okay? And what we're going to do on a smart money side is we're going to wait for them to bring one candle, come ahead above those equal highs, and pretty much take the pool of money that we're taught. I meant to make that black. That we're taught to, that we're taught to sell. You know what I mean? If I literally go boom and I go to Forex patterns, right? It's literally going to pull up flag patterns. It's going to pull up head and shoulders. It's going to pull up these double tops and these double bottoms. Look here, double top, double bottom, pennants. You got them up here. So look, double top resistance. This is what they teach you. Now check this out. Okay, so that's what they teach us. How many traders fail in, not to burst y'all's bubble if you don't already know, but literally 96%, look, 96% of traders that come into the Forex market, literally fail and really have no success. Now, the crazy thing is because they don't teach us the right way to look at the markets. Number one, only 1% of people invest. So we're not even taught how to even understand these markets. Number two, they still mislead people as soon as they come into the markets because, like it says here, 96% fail. Why? Because we come in here with small money and there's players in the market that have big amounts of money, right? So top Forex traders, and I'm not going to get into this too deep. I just got to show you guys some facts, getting on here. So as I come on here and I look for, I'm going to do top currency traders. Moral of the story, guys, we're talking the big banks, okay? As you see right here, I wish I had my other, let me go to images. Let me see if I got this. We got Wiz screaming outside. Sorry. Okay, perfect. This is what I'm looking for. So these are literally the top 10 currency traders. It's not your best friend in Miami that's a 7-figure earner. It's not Christopher Terry. That's one of the top traders in the market. It's literally the banks. Okay, it's literally the banks. So we institutional trade. What the 96% of people do, they're retail traders, and they trade with small amounts of money and look for those patterns that, that pretty much the people that move the markets, like the banks, teach them and make those liquidity pools. But if I go ahead and put myself in the mindset of Citibank, JP Morgan, Dutch banks, Merrill Lynch, Goldman Sachs, things like these are the people moving the banks. So what do they do? All right, I'm going to hop into the chat here.
Oh, this was red.
Yeah, sorry about that. I'm going to go ahead and mute mics. Perfect. So what are they going to do? This is what, dumb money. This is dumb money. These people, it's a pool of money. This is what, we see. This is what they get the masses of people do. And what do we know? We know, observe the masses do the opposite. So instead of entering sell positions here, we're going to let them bring one candle up, take all of this money. They're then going to bring one candle right back down, all right, to show that this was just a fake move because they literally bought to sell. All right, they threw $1 million lot buy. Market moves up in their favor. They take all this money. They drop a $2 million lot sell. They move the market right back down. Beautiful. So now everybody over here, type a 111 in the chat box, okay? Because I know most of my traders let me see. I got Aldo, Alex, hold up on those ones. So let me see who's been trading for maybe even over a year. Maybe Alana, Other than Alana and Shane and Sharonda, we've been kicking it for a year and a half. Other than Alana, like you've been trading within a year. Type of one in the chat box if you feel like you know the directional bias of the market most of the time, but literally it stops you out before it makes the move. So it's like you set your buy, you set a stop loss, you go to sleep, you wake up in the morning, and the market's literally all the way up here at your take profit, but it came in at your stop loss first. You know what I mean? So it's like, the market made the move that you were looking for, right? But it stopped you out beforehand. So that's exactly what this is. They stopped most people out, move the market right back down. All right. They got in that fast sell. All right. And now what they got to do is they got to break even on that buy position. So, if this buy position was, maybe somewhere up here, what they would do is bring the market back to that candle right here, close out, break even, or mitigate that candle and go ahead and take their second sell position. So guys, this works the same for the downside. Double bottom, you're taught to buy this, they'll bring one candle down, and all you got to look for is that candle down, and then money quickly rise back up, come test an area, and then we look for the markup. So that's as deep as I'm going to go into that for you guys. What am I on the DXY? We'll just leave that stuff up here. But that's it. That's the concepts you guys need to be focusing on. HowDoITrade.com/course is currently being worked on. They're actually getting that up into probably the educational platform, which is going to be super, super dope. We're going to get some smart money, basics education in there, which is sweet. But again, guys, you have to understand this. This is what we break down on the charts. You know what I mean? And again, as a beginning trader, understand the foundation. You're going to learn the general. You're going to watch the educators, and you got to plug and play at first. But eventually, even my new traders can understand this within their first 90 days. So I know you guys can see this. So just keep on pushing at it. So I want to go ahead and go into some markups for this week. What time frame would you be looking for the double tops or double bottoms? Amazing question, Connor. So the coolest thing about the markets is that, okay, you guys can write this down, like the markets are fractal. All right, Fractel, maybe. I don't know why I try to spell it. Just write it down, fractal. So what that means, if you think like fractal, like fractions, okay, it's the same thing on one time frame as it is the other. So it's like a picture is like a picture inside of a picture inside of a picture inside of a picture. So the chart's the same thing that happens on the daily chart. The same thing will happen on the 5-minute chart. The same thing will happen on the 1-minute chart. Okay, so when the market's fractal, that means like it's repeating itself almost each and every single time. Okay, so what I see on the 4-hour, I could literally go straight to the 1-minute and show you guys the same exact setups, the same exact rules, and the same exact everything being applied because the market's fractal. So, but when it comes to time frames, you want to keep a high time frame analysis and only move down smaller time frames when you're looking for that entry point. And okay, long term, the market's coming up to a sell area. When it gets up to that sell area, now that same structure like this that you were looking for on the big time frame, now you can knock down to the 5-minute and probably see the same exact structure. And this up candle probably hit the mitigation area. So we're going to go into that and show you guys a little bit. But great question, Connor. So again, guys, we'll start on Forex Factor real quick and then come back to the dollar index. We didn't have too much going on a Monday as this loads up. I'm trying to remember what we had. Euro news at 4 a.m. Euro pretty much pushed up. We'll go over that. I got a setup for EA. As we go in tomorrow morning, not a whole lot. We have this at 10 a.m., but, what we'll really vibe it up for, we also have this tomorrow night for Australian dollar. I do have a good setup on EA, so we'll be looking at that. But this is our focus point right here for this week is Tuesday. So Tuesday, FOMC, they're pretty important numbers. They're the interest rates and the federal funds rate for the US dollar. So it's a different time. This doesn't happen a lot. This is once every month. And there's normally not a lot of, liquid action going on in the PM, normally at these times, but Wednesday is a special day. We got some red folders, some conferences. So this, the market Monday and Tuesday is going to set up for the move on Wednesday. Okay, so think about this. What did we talk about? We talked about a strong dollar. So now the dollar is just going to like trickle up. It's kind of trickled around on Sunday. It trickled up all day Monday. The dollar trickled up all day Monday. It'll probably continue to trickle up until maybe the FOMC rates. Maybe the FOMC rates will push the market up and then slam it down, or it may just slam down right away. You never know. That's why we're going to go through the setups. But this is our focus point Wednesday. Thursday, we get to have some fun with GBP. In the morning, they got a couple numbers coming out. Some follow-up on USD. And then not a whole lot going on Friday. Next week will be NFP. So we'll go over that in the next week. But yeah, our focus points Wednesday and Thursday. But GBP could be anywhere come Thursday at 7 a.m. So there's the bias. All right. If you guys remember the charts that I brought up, this is important. I'm going straight into smart money, guys. So, I mean, if you have a question, you could drop it in the chat box. But other than that, this is going to be pretty intermediate to advanced. But again, same setups that I even hopped on Lex Waves at 8 a.m. the other morning. I haven't hopped on Lex in a minute. He was like, I remember him just being like one of my retail educators like a year and a half ago. Like that, like when I got started, guys, like you don't understand. Like you have like over 100 plus educators. I watched Mike Miles at 12 a.m. I had Lex Waves at 8 a.m. Like Chris Derrick went live like 2-3 nights a week, maybe. There were some other people in there, but like I didn't have a lot to choose from. So like I had to take on these educators. But I watched Lex last week, and he works a lot with imbalances, which is great. I love it. The way he taught, I actually, took a lot away from it. So, as we look at the DXY, again, our target has been 98 for the longest while, pretty much since this retracement here. All right, as you see, let me go ahead and get rid of a couple things. The other thing is I like to leave everything on my chart when I come back with you guys. So I feel like you guys can kind of learn through as I like delete it off and put new stuff on. But again, we've wanted the market to be bullish there. We've seen that happen. Now we've hit the price, the whole level price of 98. As you see, the tap off of it to, about 8 hours ago. Now this is the key thing. Above 98, we have this big. Let me go ahead and get you muted there. So we have this big imbalance above the 98 level, not only through this candle, but through this candle. So again, all imbalance is taking it from a previous wick to a wick where so it's pretty much right here. There's only buying pressure here and only selling pressure here. So there's just, liquid orders right here in this area. So this is an imbalance, okay? We've already taken this pool of money. As you see, this was a target leading up to 98. So we can get rid of that money pool. So again, pretty much what I just taught you guys, with the double tops, fake out sell, you guys can see that happen right over here. All right, just to point it out for you guys. Okay, here's a pool of money. These are those double tops. All right, again, this is the masses. We're taught to sell this. All right, big pools of money. I'm just showing you guys how the banks look at it. You don't have to look at it this way. Okay, this is just the way we look at it. These are all resistance areas. You're taught to sell. Most of the time, these people will be in profit. You won't take your profits. You're into more trades. Market comes back up. Now you're scared. You're over leveraged. Now you're using like a 7-pip stop loss. We're talking the DXY, so we're not going to talk pips. But look what the market does. One candle up to bring it right back down and sell off. So again, the market normally leaves that one candle that came back and retested. And then the cool thing about this move is we do have this last up candle before down move. So this is pretty much a point of interest candle. All right. And now the best thing about it is what we want to see happen here is for the market to go ahead and move about, another 20, 30 points up through the imbalance, maybe touch somewhere around this 98.29, 98.30 price. And then we can see some bearish movement on the dollar to go ahead and take out our target points, right? Target point 1 at that imbalance. Target point 2 could even be this candle here if we wanted to. Target point 3 could be this imbalance. And then obviously as we move more down, we have equal lows. But again, bias on the dollar. Let's rise up a little bit more, get up in here. And then we'll finally have those setups. Again, think about it. What is today? Monday, we're going into Tuesday. Market consolidate a little bit, maybe come down. FOMC comes out, create equal highs here. Market goes here. They bring one candle up, one green candle up, and then go ahead and move price down really, really quickly. right? Because that's money get behind the move. And then gonna go ahead and take a candle back up to either the open or the 50% of that green candle. All right, that's where you can take your sell entry, and then you can literally catch this on a markdown. So that's literally how you got to see the market. That's just really the price action that the banks will do, against you. Again, maybe most traders that don't see this are putting in their fast sells at 98. You know what I mean? They may have no idea, about the imbalance hanging out up here. So that's for the dollar index. So again, we'll take that bias into our currency pairs. Let me just see what I wrote down here. Imbalance beyond 98. Look at 98.30. Looking for continued bullishness, like I talked about. So again, for anything USD as a base currency like UCAD or UJ, we would want to see some upwards movement. Anything on the back end like a GU, NU, EU, all that stuff. Strong dollar, we want to see them push down a little bit more. So let's dive into it. I'm just going to go through the way that Zach and Jordan did. So we'll start on EA. Let me find it in here. Perfect. All right, let me delete up a couple things for you guys. So I hope you guys were able to follow along with that. What I was just doing with the dollar index. Again, that's kind of the same bias that we've had going through everything. As you see, I got a whole level marked up here at 6,200. I want you guys to be able to see the markets in these whole levels. Look, here's a whole level at 6,300, 62 to 63. This is literally 100 pips. Train your eyes to see that. If you can't see that or can't comprehend that, I need you to watch Mike Miles' session. He does quarters theory. Think about a quarter, 25 cents, 50 cents, 75 cents, $1. Okay, think about price, 6,200, 6,250, 6,300. This is in increments of 50 pips. You could literally do this with any pair. It's really confusing at first, but I promise you, it acts as, look, support and resistance. Look how big of a price 6,300 is. We just broke it. That's important, okay? So that plays into the analysis. I don't even have to go to bigger time frame. I just hope you guys can see here. Again, what is the market going to do? Create a pool of money, a pool of equal highs. All right, so what do? We got to look left to get right. You can't be right in the market over here if you have no idea what's going on over here. So now that we see this entire pool of money, we're like, bet, we got to push through this. You know what I mean? Like, we don't got to be down here. Let's get to higher prices. So I'm going to move into this price action up here. All right, now we're just going to investigate. Perfect. What do you guys see? Again, I'm telling you, you'll be able to see it over and over and over again. Pool of money. What did they do? Pretty much took a series of candles, moved the market up. All right, I'm going to go ahead and mark up that last up candle. This is what you guys can do, the last up candle before a down move, or the last down candle before an up move. What you'll do is mark up the wick, the open, and or the 50% of the body of the candle. Why do we use 50%? Because we work with a lot of brokers, so that's just like the median price, because again, each broker kind of gives you a different price, or puts out different prices as you go along. So look, there's an entry here. All they did here, they knew they wanted to sell the market, but they decided to buy it before they sell it, so they confused people, and started taking money to the downside. So these are some potential target points to the downside. What do you guys notice about the first one? It's at 6,350. So we're at a 50 pip level right off of 6,300, right? So as I pull the market back, all right, what do we see? So we didn't quite get there, which is perfect. So I'm just showing you guys, possible entry points. So that's what I got to wait for. And what we can do as well is break this price structure down on a smaller time frame, because what I also see is imbalance within this candle. Look, this little wick there, shift down. So that's imbalance right there. So I really like that 63.83 entry. You know what I mean? And how do you guys mark a setup like this? How do you read the setups that I send you? It'll be something like this. You take a risk to reward, short position. I'll throw it up here at the top entry, right? You can move this in pips. So normally you want to put it above the high. We're talking EA, so it's a fast spread. You know, this is 50 pips, which is above the eagle high. You could always cut that in half and just do 25, and then just maybe run from there. But we'll keep 50 because it's going to be a big reward. All right. And now you want to find a target to the downside. What are targets? Targets are pools of money. So now we have a good sell setup. We have to have targets to the downside. Let's look at price action. We have to get left to get right. You got to look left to get right. So what do I see? I see around here, right at 62.50. Some imbalance was left. All right, check this out right there to there. Boom, there's also this gap right here. Dang, I thought that was plugged in. There's also this gap right here. All right, give me 2 seconds, guys. If you type, somebody type in the chat box for me the price. Okay, as I continue to look at price here and price here, somebody type in the chat box what price most of the money is sitting at. I'll give you a hint. It's below these imbalances. Somebody type in the chat what price most of the money right now to the downside is sitting at while I charge my computer. Somebody type in the chat. I got anything in there? Cool, I got one. Only one person sees the pool of money. Let me make sure this is plugged in. Cool, we are charging and good to go. Let's see. Who saved the day? I like it, 60.80. So let's check it out. Go ahead and just take a horizontal ray. 60.80, boom, perfect. So absolutely love it, Keenan. You know, you were pretty much spot on right there, 60.80. We got 10 minutes left. Is pretty much that key price. You know, what is he pointing out? All this pool of money. Again, pools of money is just liquidity. It's just orders stacking up for them to get people into the markets to come take later. Or 59.50. Yeah, 59.50 is up under these lows, up under here. But this is, again, like this, like I'll show you guys right now, this is more than enough pips even to here. You know, we're talking 300 pips. So even a 6-to-1 ratio, risking 50. So this is a good setup. Now, again, you know, what I was writing down from Zach and Jordan. So price move to 6. Oh, wow, look. Okay, so again, like he says price move to 63.50 on the daily. So I didn't even show you guys, but this looks really nice as well. You know, you pretty much just have, again, all these wicks of a pool of money. Look how clean this is. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of making a pool of money. One candle does them dirty, brings it straight down. So this candle is huge. Wait till it comes up into this candle. Fast sell. So what I so like I need you guys to just understand that I give you these point of interest candles to take action on. Like I don't really like necessarily like will give you the trade. You know what I mean? Like spot on every time, because most of the trades aren't going to happen at this time when I'm doing these webinars. But if I can give you guys this point of interest candle and you can make a decision for yourself when it comes to these prices that I put on here for you guys and you take notes, then you too can execute when the market gets here, even if you're not talking to me or one of your, you know, leaders when it comes to the charts. All right, so just like really get, you know, I give you these point of interest candles, work with them. This is what I want you to work with. See this, go put it on your own chart and watch it play out. All right, so that's it for EA. UJ. We're going to stick to the daily. I'll go ahead and delete this. I'm going to pop through really quick for you guys just to get everything in. On UJ, daily imbalance to the downside. Perfect. So again, just this imbalance right here between this wick and right here. Let's go back here. Downside and upside, possible sweep lows. I might have to go down to, let me pop down to hour 4. So again, strong dollar. So we do, you know, would possibly want to see this move to the upside. Again, what do you guys see? So just looking at this price action, this is all I need you guys to see, that they had made equal lows. What do? Take one big candle down. So they sold, took the pool of money just to buy up. So now technically this sell is still in negatives. When the when the market comes to 108.42 or even better, you know, if we play the wick 108.50, it's reversing. It's reversing within this area. That's just the banks. That's how it is. But as price is right now, okay, we obviously have this that we're working with to the downside as a target. You know, what do you guys see? We've had a gap in the market as it's opened here. Also this imbalance to the upside as I knock down to a smaller time frame. So again, like I want the strong dollar to push this up, you know, possibly just come play off the imbalance, maybe play off this last up candle before the imbalance down move. So again, just point that candle out to yourself. You know, even possible could get some movement up in here. Okay, look at these prices, 109.25. It doesn't happen on accident. That's literally quarters theory. It goes by 25. Look at the next blue line I just put on the chart, 109.51. Like guys, you could literally click on the line, click settings. As that goes crazy. All right, 109.50. Look, perfect. And I could literally change this. That's crazy that it did that just with the door being open. 109.25. So like, look how both the key levels pretty much played quarters theory. So with this, just want to see it move up. You can get a potential, you know, downside movement. Put your stop behind over these highs, and that's 28 pip stop, you know, for a potential 100 pips. Perfect. That's UJ, EA, AU, NU, Connor. Yo, shout out to you, fam. I didn't get it back to you on AU, but that was a hell of a catch. I hope you're able to hold through it. It's even come down. It's even come down pretty far through that imbalance. Pretty much keep tanking, but again, like with these pairs, guys, the strong dollar is just pulling them down. Let's see NU. So again, same story. Strong dollar pulling it down. EU. We literally just pulling it down slower because the euros tried to be a little bullish. That was a beautiful setup. Again, up candle, down move, creates pool of money. Pew off of that. UCAD, and then I'm going to go over GU to end it off, guys. I just want to go through what Jordan went through. So I haven't recharted on UCAD. I might delete this. Yeah, I don't need any of that. Was good. Sold AU at 63.14. Yeah, so straight profit since, exactly. So again, as I go back, if I can move. So 67.13, I'm gonna put it back on the hour. So again, when the market opened up in here, you know, enter in 68.13. Look, up in this price action right here, you literally hold that on $1 per movement. You just made 64 movements, and what is it, Monday night? Like you just made 64 bucks, and you didn't even have to clock in today. Like, that's what it's about, right? So UCAD pretty much finished the bullish move. Again, like everything's kind of playing into the dollar. You know, same stuff. I haven't traded UCAD in a minute. So I'm gonna have to pull back to a bigger time frame to see some over here. As you see, some imbalance hanging out between these candles, right there on the daily. So again, just higher price action for it to come fill that, and then catch a move to the downside. See how market just drove through it 3 different times. I'm actually gonna throw a nice one on there. Look how market literally drove through this same price 3 times, no retests. That's key. Look at the key whole level that's right underneath it, 3,200. That's what I like to see. So that's key. Wow, look at that. We already got there. But yeah, just higher price action. We could even get up into this candle up here, this up candle before the down move. This is just a pool of money hanging out here waiting to be taken, right? UCAD, so GU. So GU to end it off for 2.5 minutes. So This is just all the analysis from the other night. I'm just going to delete it all. Pop back to the 4 hour. I was telling you guys that, you know, this is the target down here, but we could see that retracement. Pretty much today, like, it really just kind of consolidated in this 50 pip zone. Yeah, like 50 pip zone. Because again, just right here, you know, Washington market came up about 50 pips, you know, New York brought it back down and just kind of hung out. So, you know, what really sticks out as we move down to a smaller time frame. So this imbalance was filled. Perfect. 3100 was touched there. We're still finding newfound levels of support, which we know is just a pool of money, not an opportunity. Okay, this is the overall goal, somewhere down in here, but a valid trade entry if we're able to get it, because what did they do here? They created equal highs. So now this is a pool of money. So if they could shoot this market back up here, maybe fill a little bit of this imbalance, maybe get into this candle, because again, same instance. Look, we got a pool of money right here. They took one candle up. All right, left one candle, pools of money. So we could wait for them to come up here. We could take a nice sell entry to the downside. Something here, just throw it, you know, a nice little 30 pip stop. And again, we'll get a nice potential on this. Again, even just running 100 pips down to the whole level, you know, you'll be able to catch this. So these are the setups that I look for. You know what I mean? So I appreciate you guys hopping on here. This will be recorded and drop back on YouTube. But just keep that bullish dollar, you know, in mind, at least through tomorrow. And then on Wednesday, we're really going to see where FOMC wants to push this thing. So I appreciate y'all. Much love. Let's get it.